Hi, this is Optimus Futures, and we're back with our weekly roundup of key futures markets for our viewers. As always, we'd like to just start with the light crude oil futures market, which has been in a decent uptrend so far. This former week, however, we saw a minor pullback into the uptrend, which isn't really threatening at all. We did not see any major long-ranged, strong closing bearish candlesticks. We just had 2 to 3 red bars that indicated a slight pullback into the uptrend, which is really just contributing to the overall strength of the uptrend. We know that when price is rising into a level extremely sharply, that's usually not a very good sign of that momentum continuing. We can see multiple occasions, even here, for example, we have price shooting higher and then pulling back straight away. Here we have price shooting down hard and then pulling back up again. We see similar situations here as well. Sharp moves down, sharp moves up. Usually sharp moves in either direction are, it's just hard for the markets to sustain them. So just minor non-threatening pullbacks into a trend is usually going to be a very strong contributing factor to the strength and momentum of the trend. And that's precisely what we're seeing here as well. Although if we zoom out the market a little bit, in fact, quite a bit. First of all, we really do not have any recent action around here that we could use to indicate any of our trouble areas. We discussed about this in the last week's video as well, that when the market is at multi-year highs, that's usually going to be a problem. You usually have to just zoom out the market a lot and just go back as far as you can to find any areas of support and resistance that could hold price, although when levels are extremely old, depending on how strong they were at the time, the market may or may not react to them as strong as levels that are more recent. But once again, if a level is important, more times than not, a lot more times than not, the market will hold at it. So for example, right where we see the price holding up right now underneath the 6,400 level, we can see that we had a minor bounce off of this area. It's not a major area, so it's not really an area that we would be very concerned if we were buyers in the market. Another factor that contributes to our thinking or to the reasoning that prices may continue to go higher in the near future is this major consolidation box. Once again, it's way back in 2015 that we created this consolidation box, but this is a very important box, and just the way that it looks extremely obvious, and we had a very long period of sideways movement in this consolidation box, which may continue to hold as support or resistance for price. We actually saw that as well in the recent past when we had another consolidation box, a minor one this time, right off the lower end of this box over here, so right around there. So our expectation is that even if price sort of continues to pull down a little and just elongate the consolidation or the pullback that we're seeing right now, long-term prospects for this market should still allow it to continue to go up, right? Because we have this consolidation box that could easily hold as support should price, continue to just trickle down and just further into the uptrend. So our bias for this market continues to be up. We have no reason to believe that the momentum that we're seeing in the current uptrend is going away. Like we said last week, was a consolidation phase. We did not see a new high, a new major high being created by the market in the former week, but that's okay. What we have so far is just a non-threatening pullback that may allow price to resume its way back up. And once again, we have all the foundations for it. So this consolidation box, we believe, should hold as support as price pulls back and just allow it to continue to spring higher. As far as long-term targets for this market is concerned, we do not see any major forms of support, former support turning into resistance over here up until the 7,500, 7,600 levels, where obviously we would have all these important and significant swing lows over here. Once again, they were way back in 2012 and 2011, but just the strength of them tells us that if price really is able to get to these levels, we should surely Okay, so the next market we're going to be looking at is the S&P 500 E-mini futures market. Now this is one market which, like the crude oil market, has been in a very strong and dominant uptrend. But unlike the crude oil market, this is a market that's pretty much at all-time highs. So with crude oil, we could zoom out the chart and go back years into the past to dig out some former areas of support and resistance that could potentially still hold value today. But with this market, as much as we zoom out, we will not be able to find any areas to the left of the chart that could potentially hold as support and resistance for this market. So unfortunately, there's very little we can do in terms of plotting our support and resistance levels in advance. So we're pretty much just restricted to following this market literally candlestick to candlestick for indications of a major holdup, or perhaps even a reversal at some point. Aside from that, we'll obviously be looking at key round numbers on the chart. So for example, the 3,000 level over here is going to be extremely important, as well as the 2,800 level, the 2,900 level. So yeah, those will pretty much be on our watch list. Aside from that, obviously there's just the way the market develops, and we see candlesticks get printed on the chart. So far, we have no indications at all to suggest that this trend is going anywhere but up. However, that said, we do know that this trend has very swiftly evolved from a regular one to an extremely steep one, and we know that steep trends usually will not be able to sustain the momentum unless price pulls back and resumes the trend again in a more normal way. And by a normal way, we obviously mean not very frequent, but occasional pullbacks that allow the bulls to take a breather and just continue to reimpose their strength. So we see pullbacks over here. We saw a minor pullback over here. We really just saw the last really minor pullback around here before we literally just had price shooting off high. And if we zoom out this market, you can actually see that happen very, very obviously. So right around here, we had a decent trend. We still had prices creating new highs in the market, and higher highs, of course, higher lows as well. Then we just transitioned into a very, very steep uptrend that you can see right now, especially over the past couple of weeks. We've had a very, very sharp move up with really no major pullback at all. That to us suggests that we could actually be sharply approaching a level where we could see some selling come into the market. And although we're not saying that this could be the top, that this market is going to be topping out very soon, we do believe that we could be very near a pullback into this uptrend in the following weeks, especially if price continues to just go from strength to strength and the trend just continues to go steeper. Because a very steep trend, as we've discussed several times in the past, usually will not sustain itself. So for this uptrend to continue, we'd like to see a little bit more frequent pullbacks, not threatening though, but frequent pullbacks to allow bulls some breathing space as well as allow them to continue to reimpose their strength in the market with basically overturning brief periods of selling. So our bias for this market continues to be up for sure, although we are also cautious in terms of expecting a minor pullback into this uptrend. Okay, so the next market we're going to be looking at is the Euro currency futures market. Now, this is a market that we last discussed was a textbook example of a bullish head and shoulders pattern. Although this pattern pretty much was created at near a high, which is normally not the location we're looking for bullish head and shoulder patterns, but this was an interesting one because we basically had a bearish head and shoulders, which is right around here, convert into a bullish head and shoulders. So we had the left shoulder, the head, and the right shoulder of the bearish head and shoulders pattern that failed, and we basically had the market kind of create a bullish head and shoulders pattern where this was the left shoulder, this was the head, and this was the right shoulder. We had the neckline around this mark. We had the market break out of the neckline. We pulled back, not exactly to the neckline, but it was actually just to the 1.2 round number. And then we just saw price shoot up. Now, technically, you would expect a bullish head and shoulders pattern to play out at least to the length of the head from the neckline, and you can see that we've pretty much made that move already. Although it's not uncommon for head and shoulders patterns to pretty much churn out full-fledged long-term trends, but over here we would believe that although we're still looking for this market to tick higher, we also note that there's a lot of former support and resistance that price will basically be fighting, as it is doing that right now. In fact, this past week we had a few candlesticks that really just didn't amount to much at all. Although the last week, that is the week prior to the last one, we had a major spike up, which was to play out the bullish head and shoulders pattern. This last week we did not see any major movements to the upside, and if we just zoom this chart out to see why that was, it's not really hard to see why price is holding up where it is. So if you can look in the past here, we had some major swing lows here printed, and it was basically like a really long, a really tall looking consolidation box just above where price is currently at, and that pretty much explains why price is holding up where it is. Notably though, if we do see any major signs of any major selling come to the market right where price is right now, we also have a cushion created by all of this former consolidation here, including these two swing highs that could easily turn into support. And should price pull back and hit these former highs, it could very easily hold the support here and just continue its way higher. Although even if it does take higher, we also note that as we go back in this market, we can see a lot of levels here that could come into play. So we have this level right here, then we have this extremely important level right here, which clearly saw price bounce off as support here and twice as resistance. And then of course, if we are able to pass through all of these hurdles, even the 1.25 round number that is right around here, we then have all of these lows to be battling with. So we have this extremely important swing low here, a swing high here, a swing low here, and basically if you just mark it out as a price pivot zone or a support resistance level, you'll see that this is a really thick level just around the 1.27 area. So if you just zoom it out to put this all into perspective, so this is the level right here that we're watching, and you can see that it's pretty close to where price is right now in the longer term perspective. Although we do believe that that's precisely where price could be headed. It may not be a very smooth move up because we notice all of this consolidation to the left over here that could easily hold up price and not allow it to move swiftly and smoothly through towards the 1.27 major support and resistance level over here. But we do believe that that may eventually happen, given the fact that we've basically just broken out of this area and we've just bounced off of the 1.2 extremely important round number. So for the short term, our bias for this market is going to be to the upside, which basically means that for the following few weeks, we expect price to continue to tick higher. It may not be a very smooth move up, but we do believe that prices will still tick higher and will probably eventually hit the 1.27 major support and resistance level, which is where we believe a lot of order flow could be waiting. We will not lay any bets on whether it's going to be a major bout of selling here, or if price is going to hit this level, eventually break it to the upside and just continue the way up. But we're really just calling the 1.27 level for the short to midterm for this market. Okay, so the next market that we're going to be looking at is the gold commodity futures market. Now this is a market that's at a very interesting location. And we say that because the way we see it, you could literally analyze this market in 2 to 3 different ways to to basically figure out the market action that we're currently at. So the first perspective, and we can look at over here, is that we're pretty much sitting at the third touch of a resistance trend line. We had a first touch over here, we had a second touch over here, and we're pretty much sitting now at the third touch of this descending resistance trend line. And that, if you look at the bigger picture, actually just ties in into a wedge pattern. So we basically have this bounce that created this entire move up. It was basically a fourth touch of this ascending angular support trend line. So this was the first touch, this was the second almost a second touch. And then we had a third touch over here, and this was the fourth touch. And right here we have the third touch of the descending trend line. So you could literally expect something like this to go on, and this market to just get tightened up and eventually break to either side. That is the first perspective. The second perspective that we could be looking at here for this market is that we're pretty much sitting at the mid-range of this former consolidation box. We've talked about this phenomena before in previous video sessions, and we recently did an article on trading consolidation periods, where we go into detail about how mid-range of well-formed consolidation boxes will usually yield as future support and resistance levels for price. We'll link that article in the description below that you can quickly go to and refer for more information on this. But essentially, what we have here is when price basically pulls back somewhere to the middle of the consolidation box, a former consolidation box, it will usually hold as either support or resistance, as the case may be, at that level. So we had that pretty much play out the first time over here extremely precisely, and we're pretty much now sitting for the second time at that same level, which means that we once again could see price trickle right back down on account of major selling coming into this area, which really shouldn't be a surprise. The third perspective that we could be looking at here in terms of where price is at is that we're pretty much sitting at this, actually we're sitting just underneath this former swing high, which means that even if price continues a little bit higher, it should soon run into resistance just at the 1360 level. So either ways you look at this, one thing's pretty clear, that the market is either at resistance, at major resistance, or it's very near some major resistance. And while that does not entirely suggest that market should definitely go down in the following weeks, it does mean that the market should find it really hard to continue to move higher. Essentially what we're saying is that the trend that the uptrend here that has been so strong in the recent past has probably hit some major hurdles, and that could mean that we could see either an elongated pullback, even if prices to eventually break to the upside, maybe sort of break these highs here, the trend line that we've been talking about, as well as the mid-range of this consolidation box, and basically just break out through all of that resistance, use it as support and a launch pad to further continue higher. We could eventually be doing that as well. But for now, we do believe that price is going to be actually just battling resistance, whether it's able to eventually break to the upside, or it reverses back to the downside to just continue with this broader sideways market pattern. That pretty much remains to be seen. However, that said, we're also looking at this former resistance level that we believe could also hold as support should price find a lot of major resistance around where it is right now and sort of pulls back to the 1300 level right here. We have extremely important evidence of a former resistance here. We had multiple highs created over here that could easily turn into support, allowing price to once again trickle back up and maybe test all of this, all the resistance that we have here once again, maybe to eventually break it to the upside. So really that part of the story remains to be seen and will definitely depend on how the market unfolds at that point in time. But for now, we're just calling caution for a lot of people who might be extremely excited about the strong move up that this market has been in over the recent past. Okay, so we finally look at the 10-year Treasury note futures market, which to us was one of the most well-developed markets over the past week, and that is precisely because we were able to break through this extremely important long-term support level, which was in recent times reflective of two very important swing lows over here, and further back in the past in 2014 we had another couple of extremely important swing lows right at this level. We were able to break this level and actually close strongly just underneath this all-important swing low, which was slightly underneath the level that we've drawn here. And that's really all indicative of the fact that we're trying to break through all of this extremely long multi-year consolidation that we've witnessed here, especially the more recent one around here. We had discussed in the previous videos when the market was pretty much stuck at around these levels here that we really were looking for some more long-term decisive market sentiment, and that point may just have arrived as we're seeing this very strong candlesticks to the downside, suggesting that we could well be breaking out of these all-time extremely important swing lows and support levels, and possibly aiming for a sustained and dominant move to the downside. Like the S&P 500 market that we discussed, this is also a situation where we've seen a downtrend that has evolved from a more regular downtrend over here, where we had more frequent but minor non-threatening pullbacks, to a trend that's just very steep. But this is a story different than the S&P 500 because over here we have a breakout story, whereas on the S&P 500 index market we're basically looking at a very long uptrend that really hasn't shown any major signs of a pullback at all. Over here we're looking at a breakout story, and breakout stories will usually present very strong market action that usually will sustain itself and eventually transition into a mature long-term trend. And that's what we're expecting from this market as well going forward. Obviously that does not mean we're looking for price to really drop just extremely hard. We're looking for price to drop significantly and basically past all of these swing lows, maybe pull back, hold as resistance at these former swing lows over here, and then continue into a more mature longer term sustained downtrend that has the characteristic periodic pullbacks that are non-threatening. So obviously that translates into the fact that we have a short bias on this market going forward. And even though we're still not past this all-important swing low over here, we do have indications here to suggest that we may actually just be able to push through it. And one reason to suggest that is that if we do find support at the swing low over here, we actually have this former level now that we're through that could actually then turn into resistance and allow it. Should price just pull back to this level, we may just hold as resistance and then continue our way down. So either ways, we're just looking for price to basically continue with this downward momentum in the following weeks and just continue to build on this downtrend.